Hello, this is Wasabi Boat Research, and today I'm talking with Hal 69K, aka 1500 Badger LLC, aka shadowy crypto trader. And usually on this podcast, we have a guest and try to kind of zoom in on one specific topic, but today's going to be a little different, a little looser, because Hal's got a lot of interesting stuff going on between his general knowledge of crypto trading and investing and his newsletter, Footguns, which is a kind of crossover with crypto trading and TradFi trading, and also Hal's work on the Badger DAO Council. So we're going to kind of jump around between a lot of different things, but I've been chatting with Hal a lot lately, and he's got a lot of super good opinions and alpha that I will attempt to extract in this conversation. So Hal, thanks so much for coming on today.
I'm really happy to be here. Let's get started. I just got into a bunch of trades because the markets went down and hit my limit buys. And now I'm just going to ignore that and let's record a podcast.
Nice. So just before we got on this call, I opened my email and there was the latest issue of your newsletter, and I caught a term in there, Fibonacci golden pocket. So what is a Fibonacci golden pocket? And does that mean I missed my chance to buy Solana and therefore am not going to make it?
Yeah, I got the term from, I like to use TradingView a lot. The charts on there are really nice, clean. You can customize them. There otherwise, like the only charts that I found that are useful, like you have to, have a paid service. Their free charts are really nice, but you can also go in there and look at other people's ideas. And yeah, I think that was the first time I heard about it. Was people throwing around this Fibonacci golden pocket. It's this thing that happens a lot in crypto specifically, where you can take the Fibonacci retracement tool and you draw a line from like where the price made some sort of bottom, and then you draw that up to like where it made a top. So you can't do this until the price has started to like consolidate a little bit, right? So it had a run up, and now it looks like it's coming down a bit. And then you set the Fibonacci lines to be at zero point 0.5 and 0.618, and that in between there tends to be where the price will run back down to, and then everybody will buy in, and then you're off to the races again. So it seems to be a trade that just sort of works all the time, and it works on like every crypto that I've seen, really.
So you're a trader, right? You have kind of a trading mindset, and I do not have that mindset. I don't look at candles and wicks and resistance and support. Those are things that are just kind of like outside my lexicon. But just, you spend any time on crypto Twitter, that's a lot of what you see. And there's kind of this whole mindset and systems and terminology that's built up around that. So like I'd love to kind of just explore a little bit about how you got into that and how to think like a trader.
I mean, I have like a really really small account that I mess around with, like equities. I mean, I mostly trade options actually. I pretty fun. I have like I put like six grand into the account, and last year I got like the whatever I can't remember the tax form back or whatever, and it was like, oh shit, I moved $600,000 of volume. I ended the year like up like 0.05% or something like that, because it's like a for fun account. Like I'm not trying to I'm trying new strategies out. I'm like, if I see something, I'm like, okay, let's see if this idea works. And a lot of time it works, but I don't really think it's like a repeatable idea.
This is your options account?
Yeah, and I do all this in Robinhood because, like, again, it's like for funds, and it's really easy. Like, I don't trade anything on my phone except for this Robinhood account. Like, I'll just like buy it. If I, like for instance, like the markets came down the other day, and it was just like an obvious like buy some calls on the VIX. I bought like, I don't know, maybe like $400 worth of calls on the VIX, like double my money. So yeah, stuff like that. But that's not what I normally do. I mean, You asked about crypto. I got really long on Bitcoin after after the big crash after 2017, and it came down to like $3,000 and was like hitting $3,000 multiple times. Bought a lot of it when it came down in March 2020 because of the COVID scare. So that, like, for me, that's like my trade. That's the I'm still in that trade. I'm still managing that trade. And then I have like a small amount of my funds that I'm looking for new ideas, testing out new things. I'm really good at picking like low cap cryptos that go up. So been focusing on that a lot. But yeah, I like I think Bitcoin is amazing from a technological math. I mean, my background's in physics. I spent 12 years basically doing physics simulation work. I was like, I was a data scientist before it was cool. Like, literally there wasn't even like the term when that's what I was doing. Some professor like lied to some funding people about what I was doing so that I could continue my work. And so when I saw Bitcoin, we mined like some Dogecoin or something like the day Dogecoin came out, and then we lost the laptop that was done on.
Mm.
Um, Absolutely would have bought Bitcoin, but it's just like you couldn't. I mean, like first of all, it's too young to like know how to get it through any like reasonable source. So like the only way you could really do it is like buy it on eBay, right? And I think we tried, and just like someone just like stole $5 from us or something. So then I just like ignored it for a long time. But like I was watching it, and like I just thought it was like the coolest thing that anyone had ever created in you know in my opinion, Bitcoin is the coolest thing since the square root of two was figured out, right? Like it is something that came out of nowhere. There's nothing else like it. It solves this like problem. Most people didn't even know we had this problem of trustless exchange of value. Um, yeah, yeah, I'm into crypto for just about every reason that you can be into crypto. I trade crypto for a living because I need to eat, right? And so, I'm trying to move my life into crypto. I'm finding these different ways to make money, and right now the easiest way is just to trade it. But yeah, absolutely, I'd love to find some more like maybe being like that. That's the move towards Badger, is like if I can help out in these communities, and then they can throw me some money for helping out. Then I don't have to trade as much, and I can just go long Bitcoin and wait 10 years or whatever, like everybody else is doing.
Mm-hmm. So you have this big Bitcoin position that you're just kind of sitting on, and then you're trading kind of like around the margins of that, or are you getting in and out of your full position in these trades?
Yeah, I have like Bitcoin on hard wallets in safes that are 3,000 miles away from me. So like with no access to. So yeah, I mean that's that's a really good way to make sure that you don't try and emotionally sell dips, right? So yeah, I have that, and then I started off with a pretty small portion of that trading over the last 2.5 years or so, and now it's become like 4 or 5 times bigger than that Bitcoin position. So yeah, I'm happy with that. So slowly adding to my Bitcoin core position. It seems like this is a popular thing that I've seen amongst other traders. Is sort of like, okay, it does look like Bitcoin is going to be going up for a long period of time. So in this short term, like, do what you can to get more Bitcoin. That's like, that's the Michael Saylor trade, right? Is just like do everything you can to get more Bitcoin. I don't know if I'm into that, but I do think Bitcoin is a pretty easy trade right now.
But it seems like if you're outperforming Bitcoin in your trading, Why not just go all in on the trading?
Yeah, well, I mean, it's really just like a risk management thing, right? I mean, it's the same reason why I wrote this article in Footguns like 3.5 weeks ago or whatever about how Popsicle Finance was hacked and how this was like a really really big buying opportunity. And I put like 5% of my account into that, and like more than doubled my money. I'm still in the trade because I think it has more room to go. Like why didn't I put 100% of my account into that? I don't know. Like really it's a risk
Hmm.
management thing, right? Like what if I was wrong? What if it went the wrong way, right? Well, now I only lose 5%, right? But instead, now that position is 10%. So yeah, anyone that says like I'm putting 100% of my account into Bitcoin or whatever, I'm into that if you realize that you need to have some cash flow, right? Because like that, you can't live off of 100% in one position. And like you better be ready for that 100% to turn in 50%, right?
Yeah. Are there any other things like ETH or Solana or anything else that you have kind of the same long-term conviction on as Bitcoin, or is Bitcoin kind of like the North Star?
Yeah, I really like Ethereum. I have a pretty big Ethereum position. Again, I grew this large position. It's one of the things that's hard to do if you're good at picking things, and your positions grow, right? Is like one of the things that screwed me over many many times is like, okay, I like whatever, I 10x my money or something. Instead of then taking on like similar position sizes to what I was taking on, now I'm like, okay, well, let's 5x my position size because I got all this money now, right? And then you just like give it all
Hmm.
back, right? So I've started to realize that there's a big demand for stable coins in the markets. I mean, you can just see what's happened every time the prices have come down, right? There's been just this like fleeing from the top tier cryptos like Bitcoin and Ethereum into stable coins. And there's all these like yield opportunities right now in DeFi for stable coins. So I have a lot more stable coins now than I would have in the past because right I made all this money, and now I'm trying to like protect it. So one of the ways that I think to protect it is Ethereum, because I just think Bitcoin and Ethereum are going to be sticking around for a while. And one of my favorite trades right now is just putting Bitcoin and Ethereum together in like the Sushi Swap or Uniswap LP, and then you just let everybody go argue all day about the price, and they pay you money, right, to argue about the price.
Yeah, I like that. And I'm thinking about more and more moving, I'm big ETH, I'm big Bitcoin, but yeah, like moving to something like that. I have I have a lot of ETH in the grayscale thing in my IRA, and like I used to be really kind of like grumpy that they're charging me this 2% fee, but then it's like actually it's almost kind of worth it to like not be able to spend ETH on like NFTs or like shit coins or just doing stuff, because like it's just like this amusement park that I always find myself spending my ETH on other trades. So it's almost worth the holding fee just to have it be in this form that I can't really touch and just have to lock it away.
Yeah, yeah. No, that's similar to like what I was saying with the like my Bitcoin position on a hard wallet in a safe, right? I mean, the risk there is that we get another 50% correction, and then Bitcoin just never comes back, right? But the last time that happened, right, Bitcoin was down for 3 years and then it came back. So what does never comes back look like, right? So yeah, for me, that's just sort of like, okay, I wrote that off. I have enough money in US dollars to live off of for a while. I have job opportunities. I'm a successful trader. I can take a pretty big risk here on Bitcoin, and that's what I'm doing.
Yeah. So before crypto, one of the things you mentioned at one point, you were doing horse betting as kind of your main thing. How did that happen, and how did you end up leaving horse betting, or what was your kind of like system for that?
Oh yeah, I am behind an NDA there, so I can only talk so much about it. But I basically got headhunted out of my physics position, and at the time I had been doing some work interning at a hedge fund, and so I was learning trading and learning the markets, and you know, I think it was a natural transition because what I had been doing a lot is like signal analysis. So, just right, trying to find something in a bunch of noise. Everybody basically does signal analysis. They don't realize they're doing it. So yeah, the horse racing people found me, brought me in, offered me a big fat salary, and basically tried to make them some money by changing their models, building new models, upgrading their infrastructure, stuff like that. Um, and yeah, the industry itself did not have a great time with COVID because like a bunch of the tracks shut
Mm.
down and that sort of thing. So yeah, I can't go too much into why I'm not there anymore. But it was a great time for me. Certainly was nice to have cash flow to keep adding to my Bitcoin position.
Yeah. So, like, I guess the question I have for you is that you have this background in statistical modeling and um, quantitative trading and stuff like that, where, I'm not an expert on this, but the idea is that you're kind of taking in all this data, you're doing machine learning on it, and then you're kind of producing these predictions. And basically, like, humans are involved lightly or not at all. Maybe there's a kill switch or something like that, right? It's kind of like the Man Who Solved the Market book, or like Renaissance,
Right,
right?
right.
But it seems like when I'm reading your stuff about crypto trading, I'm seeing more of like support, resistance, Fibonacci. These are kind of things that are like the kind of like old school Wall Street trader playbook, and not this like quantitative finance playbook. So how do you think about that? Like, are you doing the quant stuff behind the scenes, or is that something that doesn't really work yet in crypto?
Yeah, I mean, I have a much more like complicated system that I use in my trading, but I don't post it because I have a very my background. One of the things that I did was creating visualizations of like dark matter simulations and like star formation and things colliding, whatever. So I have a thing for the visual display of quantitative information, and I don't like to display stuff that's hard for someone that doesn't really know like wait if you I like to think of like the person that's looking at this knows nothing, right? And like so how can the visual itself like show them what I want to show them? So yeah, what I try and do is like, let me just take one step back. We have in the Footguns publication, the daily newsletter that we put out for our paid subscribers. I put out this thing that I call our cheat sheet, and that is is these levels that I get out of the more complicated system that I use. Basically trying to show you like, okay, for the daily, the weekly, the monthly time frames, this is kind of where I think the price is going to bounce back and forth in between. Um, but when I'm going to post a chart, I'm probably going to go back to something like a moving average or like some simple structures. Um, just one thing to note though is like there's a lot of people in crypto that aren't trading this in a quantitative way, right? And aren't that they are using like these old school tools, right? So you don't really want to fight the crowd, right? So if everybody is looking at Bitcoin forming this double bottom, or otherwise some people refer to it as like a W bottom. Um, everybody is just like cool, like let you buy that because W's go up, right? But that's not the reality. Like the reality is that like W's go up more than 50% of the time, right? But they still also go down. But if everybody is like having that mentality that's trading this thing, then that it's that sort of like fulfilling the prophecy. Like if everybody's doing it, it's what's going to happen, right? Why fight it? Why get more sophisticated? Um, and so then what you look out for, right, is when does it diverge, right? And that's what happened in May, right? In April and May, all of a sudden, all these like old school TA things just stopped working. Like there were all these patterns were formed. It's like, okay, Bitcoin's going to go up here, and then it didn't, and then it's like, oh, it's going to go up here, and then it didn't, right? So that's when it's like, okay, now all the sophisticated people get to show up and have their turn.
So is it fair to say that these, like, in the same way, I think my view has kind of changed to this. I used to consider myself sort of like a value investor in quotes, and like looking for stocks with low PEs or price to book, or things like that. And then the view that I've kind of adopted as I've gotten more into crypto is that like those things are just memes that like a lot of people agree because Warren Buffett said, you want to get cheap stocks, or Ben Graham or whatever, right? Like they're looking for these metrics, and then it's the human thinking that those metrics are desirable. That's what's causing the buy. And in the same way that a human thinking that a W formation is bullish, that's what's happening, right? A human is deciding that this is a W and that means buy. So is that like, do you see these kind of trading signals as just like memes in the brains of traders that you're trying to like be one step ahead of, or is there some kind of like fundamental force of nature that's happening in this W that's causing it to be bullish, or that's for whatever reason that's causing to break down?
Yeah, I think, I mean, in some ways both things are happening, right? And one thing though, especially if you're trying to be smarter than everybody else, often you can be misled into being a contrarian, right? So you might be like, oh, I'm going to short this W because everybody thinks it's going to play out, so it's not going to play out because everybody thinks it's going to play out, right? Sometimes just like the smart thing to do is just like, let's just go with the
Mm-hmm.
crowd, right? And sorry, what was the second part of your question?
Are these chart formations just a meme, or are they kind of like an actual force, natural force in the market that's showing up?
Right, right. So yeah, okay, that's why I was saying both. Like yeah, so the meme part is like yeah, the crowd, the meme, yeah, just go with the crowd. If if there's a lot of people coming into Bitcoin, right? Like if it's a quiet market, no, that it's probably not going to happen, right? But if there's just like a ton of people coming in, that's when the memes like start to show up, right? So yeah, if you start seeing like increased volatility, you go look at like the on-chain metrics, you see new accounts being printed every day. I think that's when the memes like start having their strength. That's when like all the that's why instead of W bottoms having a a 60% chance or whatever, they start having an 80% chance, because that's all anybody knows, that or majority of the crowd knows. And then the actual like mechanics of it, you know, it is interesting. The part of it that confuses me, like I get who the people are buying the bottom. That's the smart money, right? That's the people that have something that's telling them that this is the place that you want to be a buyer, right? And then the people that are selling at the top, right? That, again, that's the smart money. And so I guess just like the people that are filling it in are the dumb money, right? I don't know. That's the part where I get confused. Is like who fills in the part from the bottom to the top of the W. Is that just like noise? Like they talk about these like random walks, right? Or it's like if you and I are trading, once we start getting hundreds and hundreds of market participants, then maybe the price just like starts wandering around for all these various reasons that you can't really pinpoint.
Got it. Okay. This brings up something that, you're talking about smart money institutions. You mentioned the other day that you were on a call with one of these like investor calls with a, bank, and they were kind of pumping different coins or bullish on stuff. Do you get on these calls regularly and kind of try to develop a sense of what the institutions are doing so you can front run them?
Oh, I mean, I'll get on any call anyone will invite me to. I'm just like, I just want information, and I don't trade everything, right? I don't trade every like piece of information that comes my way. I'm pretty obsessed with just like information in general. But no, I'm not like out there just like hunting for calls for like inside scoops or something like that. I'm pretty good at finding finding things on my own without having to go have someone else like tell me to look at something. I spend a lot of time just on the internet, like looking through things, forums, websites. I mean, even just like hunting through other people's wallets on Ethereum, finding coins that I've never seen before, researching those coins, like going down like these rabbit holes, and then eventually like, okay, cool, let's go move some funds to their website and try it out, or like let's move funds to this alt chain and see why everybody's into it. Like for instance, like I was on Polygon like really really early, and early on Polygon, like you could send transactions back and forth like nearly instantly with no delays or anything, like super cheap. And now it's still super cheap, but it's like it's lagging, right? So that like firsthand experience, like you can't really get. I mean, you could have someone tell you that in a call, like I just told you that right now, but like if you didn't use it, then it doesn't mean as much to you. Like if you weren't there every single time it cost $1,000 to swap on Sushi Swap because Ethereum gas fees like shot up as the price was going down. Like that won't be as meaningful to you when you get on Ethereum and the fees are low because no one's using it, and you're just like, oh, this is a safe space.
Speaking of Polygon, this is a question that I've been thinking a lot about. This morning, I was able to do about 4 or 5 Ethereum transactions that I've kind of been wanting to do, but gas is so crazy and just kind of like meaning to do. And so, like, using Ethereum for me has kind of become like this special occasion, right? Like, you're like looking for the right time to do it. I'm not a huge whale. Like, even if I had a lot more money, I would still be not happy to spend.
Yeah, no, I think you have to have like 10 million minimum right now to be even thinking about swapping on any of these, during the day especially.
Right. So Ethereum is going to become this special occasion chain. Um, all of the other chains, Solana, Phantom, Polygon, have all had incredible pumps, but it just seems like now there's more and more coming out. How do you see that dynamic coming? Like my initial thought was, okay, do you know vfat.tools? That's like the site where you can find new farms. Um,
Yeah, yeah. I haven't spent much time on it, but I've definitely been there a couple times.
my initial thought was just like, as soon as a chain comes on the top of vfat.tools, you just want to buy their native token and just sit on it because they've all had these incredible pumps like Phantom, thousands of percent, Polygon. And once there's just some like minimum threshold of activity, then you would just buy them. So that's kind of like my naive approach to that. But I'm wondering if you have how would you play that trade? Just like the Ethereum is too crowded, we need to move to layer twos or alt chains or whatever. But like, how do you think about that process that's going on, and like, do you have a preferred way to play that?
I mean, I kind of think it's bullshit. Like, I think that this is just a patch, like a rough patch or whatever um, that what's going to happen is they're going to get a lot of traffic to be moved onto all these side chains, right? And that's going to free up some room on Ethereum. And then Ethereum does have like promised upgrades in the future, right, that are supposed to make it a little bit nicer to use. We'll see if those play out. But I think that I like your idea. I liked your idea of look for a chain that's just showing up and getting some traffic, buy it early, right? But I think that this trade might be like this could be a trade that's sort of playing out and almost over. When if you go sort on like CoinGecko right now, like the top like 15 or whatever cryptos are all these side chains, right? So I just don't know how much more room there is in this trade. I think most of it is over. You might be able to get a couple of the I like one of the ones that I like is Phantom. The just from a technical perspective, it's like it's looking pretty good. There might be like some room to run there, and then maybe Solana goes up to 500 from here. But just that risk reward's not there anymore, right? It went up 1,000% already, and now you're looking at a double, and it could go minus 50 from here, right? Pretty easy. There's a lot of room underneath it. So yeah, if you could catch some new like gem that's like just emerging, I think it's there. I think again that the trade is kind of like playing out, and now everybody's going to be putting eyes on like what's the next crypto cycle trade, right? Like because we sort of saw like the NFT thing, and now the NFTs are I mean individual NFTs right are still going for like insane prices, but the certainly everybody moved over and now staring at this like scaling like let's scale Ethereum. But if you remember, like once the volatility dies down, right, and all the people that aren't actually here for the long run, you know, go out the door and go find something else to do. Um, there's going to be a lot more room for the people like us that are planning to stick around in the long run and use Ethereum.
So is this kind of like the moment where the United States has like 500 car companies and there's this innovation, suddenly the market is flooded, and then the enthusiasm kind of wanes, and then a few kind of big winners emerge?
Yeah, I think so. I really do. I think the only difference, though, is and we talked about this on our podcast with you a little bit, is that the crypto, if as long as there's somebody out there that's willing to run some servers and support the cryptocurrency, it's not going to go anywhere. So, they're going to be around for the midterm, and I mean like probably into next cycle, right? Like you're going to see these names popping up again 5 or 6 years from now, or 4 or 5, however long it's going to be.
So I wanted to go back to also something you said earlier about finding low cap kind of hidden gems, and wanted to see if you could dig a little bit deeper on your process for that. So you said you kind of stock wallets. Do you use anything like Nansen AI or any tools like that to sort of identify things, or what are you looking at to find these new emerging projects that are interesting to you?
No, the Nansen, absolutely not. I've had people, show me that or whatever, tell me things. I'm just I'm just hesitant towards stuff like that, just because it's like, oh, there's so many people on there. The other thing is like everybody's doing these like order book sniping thing. I just to me it just feels like a crowded trade. I personally like Discord. It's just like go meet some people, get involved in like at least 5 or 6 different communities, pay attention to what people are talking about, and like join all the AMAs that are offered. And yeah, eventually like you catch wind of something. Um, so the thing is though, like my strategy is like not like I'm not I don't work for anyone, right? It's just me. So I'm not like sticking to something. So for instance, when I first discovered Pickle.finance, right? What was that, 2020, end of 2019, or was it 2020? I can't remember. COVID.
That was like DeFi summer.
Yeah. COVID has like added that extra year. I can't remember when anything happens. So, anyways, I first discovered that was like a moment where everything was like really still quiet in the DeFi space, and so through like a chain of events in discovering Pickle, I was able to find like 3 or 4 different projects. One of them was Badger, before they were even launched. And so I ended up getting like these airdrops, and The thing I really like about the airdrops is like, the first one I got, I was just like, oh, these guys are suckers, right? And then the next four I got, I like went and researched the project and was just like, holy crap, this sounds pretty cool. I'm not only gonna accept this airdrop, but on the day it releases, I'm gonna wait for a buying opportunity and just like go in pretty heavy on this project.
So kind of human intelligence, looking at Discord, chatting with people is the best source that you know of.
Yeah, yeah. I think everything else is like you're getting spoon fed a trade from somebody else, right? Like so, like somebody tells me about something on Discord, like 9 times out of 10, 90 times out of 100, they're just feeding me crap, right? But you look at enough crap, all of a sudden, like somebody gives you something good, and you're just like, oh wow, this, I actually see where this project, is driving their value from. I see the quality that they're putting into their marketing, like, these sorts of things, like, really, it's like that 10,000 hour rule, right? Like the PhD thing. You spend so much time in the space looking at the stuff that doesn't matter, that the day that something comes along that does matter, you really push into it because you're just like, oh wow, I see how this stands out from other things. Like for instance, like Luna, I watched Luna like go up and crash, and in April and May, and I was just like, okay, this thing's called Luna. That's really stupid. I really was cynical about it, and then I started like looking into it more. I told you I'm pretty bullish on stable coins now, and so I was like, okay, this is an interesting stable coin play, right? I can go long on a an asset that backs a stablecoin, like similar trade to Maker.
Yeah.
And so I posted that in Footguns and was just like, hey, from now on we're gonna follow Luna every day. It's at $6, and right now it's trading at 40. Um, and I even got pushback when people were like, oh, you're just pushing a trade that all these hedge funds are into, and it's just like, yeah, dude, like if the hedge funds are buying it, like, and you're small, you can move faster than them. Like get in front of them, like buy it, sell it to them at the highs.
Yeah. So let's move a little bit to Footguns, because like this is, I'm a subscriber. I was one of, I guess I found you're posting stuff about it in the Badger Discord where we both were. So I think that's how I find it. And you do a podcast and also a newsletter. So could you just give us a little like backstory on that and introduce us to Boomer and how you guys launched it and where is it going?
Yeah, I've known Boomer now, I think like 12 years, and he's been in the global macro space for a long time. And he was in private equity for a while. But I went off in. I mean, I was doing the physics stuff for a long time, and then I went off and did the horse racing thing. Small stint in the hedge fund space. So we met through my small stint in the hedge fund space. And then we've been back and forth for a number of years. He almost got Bitcoin right in 2017 when I was just like, hey, I bought this at 9,000, just sold some at 17,000. Like, what do you think is going to happen here? Do you think this thing's got more room to run? And he was like, oh, I think it trades sideways for a few years. And he was almost right. I mean, he was almost right in the crypto sense of like, it crashed 80%, and then, had, right, I think 2019, it like ran up to 14,000 again. Um, but, we really started talking again in November, when I was just like, hey, I really like went heavy into Bitcoin at 3K, because I thought it would recover, and like look at it recovering, and I was just like, and this whole stock to flow model and DeFi space, I was like, I think this thing's actually got way more room to run. And then like DeFi was getting interesting, right? I don't think we would have done Footguns if DeFi wasn't so interesting, because I started trying to explain to him like smart contracts and Sushi Swap and Uniswap and Badger and all these, the algorithmic stable coins and NFTs. It just the space is just so deep, right? And he was just like, "Whoa, like you're sending me hours and hours and hours of these messages explaining this stuff. Like, people that aren't into crypto need to hear about what's going on because this is no longer like hodl your bitcoins and hope for hope for a pump or whatever. This is actually like becoming an interesting space now. And yes, Bitcoin is still like a big part of the space, like the heart of the space. The store of value or whatever. So then, basically I told him about like my trading strategy that I have, these tools that I use, and he's like, okay, well let's test this thing. So he gave me a couple of setups on copper and oil, natural gas, even the S&P 500, and I made some just like excellent calls that he even traded. So he was like, okay, like this is what we're gonna do. Let's put out a cheat sheet for our paid subscribers where you sort of give people these same calls that you gave me to make that I was able to trade successfully, because that's worth a ton of money. And then we're going to give people our commentary on the crypto space, and we're going to stay pretty anonymous so that we can we just got really good feedback on our recent article about the Coinbase tweet storm that went out to the SEC. And I went and read like what a lot of other people were saying about it, and it was just like a bunch of copy pasta. They're just like congratulating Coinbase for taking a stand and sticking up for crypto, and we're just at the point where it's just like, okay, let's let's get some regulation going on because DeFi is really interesting, and like the regulation needs to promote DeFi, and let's get rid of this infighting and the us versus them thing, and like let's just move forward and teach the old folk what they need to know. And then and to be fair, like these SEC whatever, like they screwed up in 2008 2009 in a pretty big way, but there's people that are involved in those spaces that have knowledge and wisdom and past experience that they could bring to the crypto space and make it better. And so I would love to see that happen.
The thing that I really like about your podcast is that it has two, like you're the crypto native guy and he's the kind of hedge fund crypto curious guy, right? And it's like you can see the interplay between both of you in real time, and it's the same way, like I think about my kind of journey and onboarding. I was, in this group last summer during DeFi summer that kind of just like, it's like when you're in the roller coaster and it shoots you from 0 to 70 miles an hour, that kind of feeling of what's going on, and you can kind of like recreate that in the same time. I think there's not enough good resources out there to sort of bridge that gap, right? Like crypto definitely has an onboarding problem, because it's so many steps. There's not just a DeFi button in your Vanguard that you can press, right? Like there's a lot of knowledge that someone has to have before they can even do transactions, and much less like do high dollar value transactions, and the stakes are really high, right? Like there are a lot of mistakes that you can make that will result in permanent loss of funds in crypto. So yeah, like I think and the name of your newsletter really speaks to that, right? Like Footguns, right? Like it's trying to avoid people blowing up and making dumb mistakes. So I think it's great. It's great what you guys are doing, and you have a companion podcast, right? The podcast is public, or there's some private for subscribers and some public. How does that work?
Yeah, right. For instance, one of the podcasts that we did for our private people was the system that I use for trading. Boomer went on interactive brokers and put on, I don't know, like something like 100 grand of risk, and I was literally just like yelling numbers out to him in the podcast of where I thought he should get out of the trade. It was a moment where there was a lot of volatility, and it was like a 5-minute long trade. He he closed it like up 10 grand. So stuff like that, giving out to the private people so they can hear like, hey, this is what it's like if you're someone that's like putting on a bunch of risk and like trying to get a short-term trade, and like the emotions that are involved, and the emotions you need to ignore, and like how we stuck to a system that we had even in the middle of all of it. And then another one for the private people that we did was like a trade that I put on, and how I managed that trade. Where so for the free part, it's more of like our commentary on the space, and trying to give people some perspective on memes is a really good word. Like for instance, really early on, I think this is before we actually launched Footguns, but we were putting out the podcast, you know, to practice and to make sure that once we launched Footguns, it'd be a quality product. But I called the Dogecoin top like perfectly, because there was this whole event of Saturday Night Live, and how Elon Musk is going to be on Saturday Night Live. And I was just like, I'm just seeing a lot of chatter in the space that like Elon Musk is going to somehow go on to Saturday Night Live and like rescue the Doge trade. And I mean, the thing just like started going down like every single word he spoke on the show, right? So yeah, that kind of commentary, especially when we see something that people aren't bringing to light, right? If crypto Twitter is just praising something that really needs to have a more critical view on, and not necessarily like we're just going to go and like you know be negative. It's just if we see something that like you should be looking out for, and just because you need to be looking out for it doesn't necessarily mean it happens all the time, right?
For the Doge top, were you just kind of like selling, sell the news, or was it your indicators were telling you that this was toppy?
Yeah, no, this was a. I don't even think I ever like pulled up a chart on it. I just had. I knew people that had bought Dogecoin, at what 10 cents or something like that, and they literally like texted me being like, hey, crypto's doing pretty well lately, did you see Dogecoin? It's like, I bet it's gonna go crazy after Saturday Night Live. And I was just like, okay, that's a top signal, like as clear as day I've ever seen. So it's not necessarily like, oh, this is the top. It's just like, hey, you should probably be warned that a bunch of people that bought Dogecoin that don't know why they bought it now think that Elon Musk is going to go on to Saturday Night Live and make some announcement about like how Dogecoin is going to be the world's new currency or something. You know what I mean?
Yeah, I think the Elon stuff is really interesting. Like, I think I wrote a tweet about this, but like we're going to enter a world where every billionaire is kind of like the patron of their own crypto. Like you can kind of see it, like the way Elon adopted Doge and is kind of trying to pump it and associate himself with it. I just think like, I don't know, you guys talk about influencer tokens, but I think these billionaires are kind of like realizing that it's here and want to get behind it, but also exert influence on it in a way. I think there's what is his name? Croissant, the Twitter account Croissant had a good thread on this. But like, how do you feel about that kind of like personality adoption and the that merger?
No, that's spot on. I mean, think about it. Most people when they when they hear Dogecoin now, they associate Elon Musk, right? Like, so that as far for him, like that's the cheapest ad campaign he's ever run, right? But yeah, I do think other people are going to catch on to that, and you're going to see. I mean, certainly there's going to be a billionaire that just like launches their own token, right? But yeah, you're also going to see billionaires getting behind some existing token that they think that they can pump, or they can get that audience that's the audience of the token, to start paying attention to them.
Yes, the token audience. That's a big thing. I mean, that's like something I've realized with like the podcast is like, you know, crypto is full of these like intense sub communities that have their own audiences, right? And like getting your message aligned with these other sub audiences is a great way to build up your own audience, or it's kind of like one of the most powerful forces in crypto, like regardless of what you're trying to do.
Yeah, no, I agree with.
I wanted to ask about Footguns newsletter just recently airdropped a token to, I guess, subscribers and other people like supporters of the newsletter. So I thought that was really interesting. Can you give us the backstory on that and what's the token? Like for the first question is when token. You've answered that. Now the second question is when value accrual to token. It's kind of like how every token conversation goes. So what's happening with it?
Yeah, so I mean, certainly experiment, right? But this is my intention. And well, before I start though, the airdrop is ongoing. September 30th will be the end of it. Anybody that goes, all you have to do is sign up for a minimum of a month and send us a public Ethereum address, and we'll send you some tokens. We did it to teach people, right? We're the number one goal is as a teaching tool. I've put out this series in the newsletter, called How to DeFi. There's several other people out there that have done a similar type series. But just trying to point out to people like how to actually do this, how to go install the software that you need to start interacting with DeFi protocols, with a bit of my commentary mixed in about what could go wrong. Which is the Footguns thing. It's the thing that seems to be missing from a lot of tutorials, right? Is they're just like, yeah, install this, go on here, swap this, boom, you're done. And it's like, okay, well, what happens if Ethereum's gas fees go up to $1,000 per swap, and you just put your tokens into a pool, and that sort of thing. So I created the token on Polygon, and I did it using a 17-minute long YouTube tutorial, which I've linked on our Twitter, and I'll eventually write something more to put out to the newsletter so that everyone can see how they can go create their own tokens. And then because what I wanted to do was give something for people that went and installed a MetaMask to do if they didn't want to go spend $60 or whatever it is to transfer funds around on Ethereum right now. It's very expensive to move a small amount of funds around, so you can't really go play with these things, right? So what's awesome is that Sushi Swap now, on Polygon you can also just make a pool and put whatever you want in it. So I made my own token, and then we took $10,000 and we paired this token up against $10,000 and put it into a Sushi Swap pool. And so then we also handed out a little bit of Matic to our subscribers. So anyone that wants to basically can go and get, I can't remember exactly what the value of the token is right now, but somewhere between like 10 and $30, and go and try all these different DeFi protocols on Polygon. And on Polygon, you can make like 10,000 swaps, right, for a penny or something like that. So with this tiny amount of money that we basically handed out through our token, people can go out and try DeFi for the first time. So that was part one of your question, which is right, when token. Right. I just want to point out the difference between our token and like something like some of the creator tokens that I've seen people handing out, is that we have an active market for our token, right? You can go on Polygon right now and trade our token all you want. And so then, part two of that is like token value accrual. So what our plan to do is, the end of the quarter, September, call it September 30th. We're going to look at how much money Footguns has made since its release. We've only been out for a month and a half, right? And we will take 10% of all the money we've made and buy back our token out of that Sushi Swap pool, and then send what we bought back to a null address, effectively deleting the token. So it'll increase the value of the token inside of that Sushi Swap pool. So anybody that wants to, cash out on that, thinking that we're not going to then make more money in the next quarter, can do that. But yeah, we we have 2,500 subscribers after just barely 2 months of existing. We're really happy with our growth. We're also really happy with the Footguns token campaign. It's converted a lot of free subscribers to paid subscribers, and it has brought in new subscribers. And the part that's my favorite is like people are talking to us now. Like we made a Discord to go along. You don't have to have the token. You don't even have to pay to subscribe to Footguns. You can join our Discord, and we're just like, we're talking about the markets, we're talking about crypto news, we're talking about the stock markets even. And so it's really heightened the involvement that we've gotten from our readers, and that's what we want, right? Because that's sort of like community hive mind. Like, someone's going to point something out to me, and then I'm going to be able to tell all the other readers about it if I think it's interesting.
Yeah, that's really cool. I saw in your Discord you were also talking about using the token as a way to vote on which coins you cover. Is that something that you're thinking seriously about?
Yeah, absolutely. The obviously right now we have, I think we're at like 53 Ethereum addresses that are holding the token. And we're only getting about like 5 or 6 active people in the Discord. So just for you know right now, if that's the only involvement we're going to get, then yeah, I mean, maybe we run this experiment with just without using the actual token itself, but having like some voting within the Discord. And then if that is received well by our readers, what I would want to do is do a big how-to guide of like, how are we going to transform this simple ERC20 token that I made on Polygon into a governance token, because there's many routes to go, right? So that's what I want, right? I don't want this to just be like, hey, I decided this is going to be a governance token. I'm presenting, hey, this could be a governance token. Here's my initial idea. How does everyone feel about that? And then how can this be a way that we teach our readers something that they don't know already? Make them smarter.
Awesome. So I wanted to shift gears a little bit because the way we met was on Badger, some calls around Badger, and I guess we should like both disclose, or at least I should disclose, like I am doing some paid work for Badger on their marketing stuff. And you are now a member of the Badger Council. So like you have kind of a, what is it, 7 members. There's several are the core team and several are community members. So you have one of the community member seats on the council. So welcome to our new council member. And you took over for, I guess, Gabriel Haynes, who went on to other things. But what drew you to Badger? Why do you like it? And what was like strong enough to make you want to be such an involved person to the point of being on the council?
Yeah, I think, let's see. There's two parts of the story. One is the emergence of BlockFi, and then like BlockFi becoming taken more seriously, a lot more money moving over there. I personally used BlockFi to get some leverage. Last or sorry, two Augusts ago. 2020. Yeah. I took some money over there and borrowed against my Bitcoin, right? And then I went and bought more Bitcoin with the money that I borrowed. I closed that trade in December 2020 after Bitcoin ran up into the 20,000s. So I had already started looking into this idea of like earning yield on your Bitcoin. That was a product that BlockFi offers. Is that if I have my Bitcoin on their website, they'll give me some return, and they generate their return through a couple of different ways. One of them is by lending the Bitcoin out. So I like that idea. What I didn't like about it is when I tried to withdraw my Bitcoin, you get an email from them that says, hey, hold up 1 second. Like, we got to make sure you can do that.
Mm-hmm.
So then through this Finance thing, started really learning about DeFi and yield, and when I say yield, I mean like yeah, yearn, right? Yearn finance, and I you know so I really like this idea of like bringing things onto Ethereum and right staking them for yield versus sending them off to like BlockFi and just hoping that whatever they're doing in the background is safe. And the risk is different, right? The risk is that you don't have control of your funds, wherein in smart contracts you have some control over your funds. However, if there's something wrong with the smart contract that no one knows about, and then some person finds out about before the developers can fix it, then you could literally just like have all your funds stolen. So the risks are similar, except for right, you just have more control in DeFi. So then I discovered HoneySwap, which was on the XDAI smart chain. This was like one of the first times Ethereum started getting really high fees, and everyone was like, okay, let's move over to XDAI and see how that goes. And it really didn't pick up. It didn't really get much liquidity. But on the HoneySwap Discord, before Badger launched, there was an AMA where Spada, I don't know exactly how how he wants people to refer to him public, but is the guy that founded Badger. He gave an AMA talking about like earning yield on Bitcoin on the blockchain, and for me that was just like easy done. Like day this comes out, I'm bringing my Bitcoin over from BlockFi and putting it on Badger. And then because of all the various things that I had been doing in DeFi, like staking on SushiSwap LPs and using Uniswap, whatever. I can't remember exactly all the different ways that Badger qualified people for their airdrop, but I got an airdrop on like two different wallets. So then I was like, okay, I want to get long this thing because I think yield on Bitcoin. I have a long term Bitcoin thesis, right? Like I've got like a 5-10 year Bitcoin thesis. Like let's put a bit of risk on and try and earn some yield on my Bitcoin, right? So yeah, I couldn't see how Badger doesn't grow as Bitcoin grows in some proportional way, and I think disproportionately faster because it's a small market cap and it's a new space. It's a new product. It has a lot of room to grow, and then it's offering a really solid product. I went into the Discord, started seeing like what the team was doing, and I saw all the feedback they were getting from the community. Yeah, the I see it as having very similar risks to a lot of other DeFi protocols, but it's just like a superior product.
Yeah, I think that echoes my take on it, and it just makes sense. Like the interoperability between blockchains, like you can't really do DeFi on Bitcoin. Where are you going to do DeFi on Ethereum, and then secondarily these other chains, and they're working on these other chains too. And then now Badger, through their partnership with Ren, has a fee split on the bridge. So if every time Bitcoin is brought over to DeFi, Badger's earning a fee. Is that going to accelerate? Are people going to want to do DeFi using their Bitcoin, which is the biggest asset? That seems kind of like a no-brainer, right? It just seems like if they can manage these smart contract risks, which so far they have been doing, is this thing going to be bigger in 5 years? I think yes, right? Even if there is some, hack, whatever, they have 34 different pools. So it's very unlikely that I think all of those would get affected, right? Or even more than one. So yeah, I'm just really bullish long term. I think, it's at the intersection of these two big trends. So then you've just recently joined the council. So like that means you're kind of voting on big picture decisions and how to spend money and the future of the protocol. So like what can we expect from the and I should say on the Badger Discord, you're known as 1500 Badger. So what can we expect from the 1500 Badger regime?
Yeah, I've been thinking about that a lot. You know, I think one of the things that is gonna change, right? I mean, if we get there, right? First of all, $1,500 Badger is also like, 150,000 plus dollar Bitcoin, right? So I don't know. Do we get there this cycle? I still think probably. Do we stay there this cycle? That's a harder question to answer. But I think how it becomes sustainable is, much larger players start coming in. You get a lot more political involvement, and what I mean by that is we start seeing, some more talk in campaigns, and they could just be state level. But we get some more talk about, like, hey, these are investment tools that our citizens want to use, and how can we make them safer for them to use, which is like, right, regulatory involvement. So I don't really see it being that valuable in the current, like, wild west sort of situation that we're in inside of DeFi, which is everyone sort of like bickering about how, like, oh, we don't want the government involved in this because how could they even tell me what to do with my crypto or whatever. If this is to be taken more seriously, it has to be taken more seriously by everyone, not just the people who are already involved in it.
So you're looking to have Badger move to a more regulated simpatico with the government, like that kind of trend has to play out in that way, and you're looking to push the protocol in that direction. Is that a fair recap of what you said?
I mean, push in that direction. I don't think like Badger has to necessarily push in that direction. I think like the DeFi space is naturally pushing in that direction. I mean, we saw the Uniswap fund forming. You see like Aave is making some move towards like bringing institutions in. Badger has this thing with Fireblocks that's been moving forward towards like finding a way to bring institutions in. Sushi Swab was like talking about in Trident about like private LP pools. So I think like there's like a sort of natural movement in the space. The the people that know how to regulate this, I just don't think exists yet, right? I think there's some clever, you know, lawyers out there or whatever that are like working it out and will make it public to people. I don't necessarily think Badger needs to like be the revolution, like pushing this revolutionary like regulatory regime. What I've seen from the team so far is that they're being very cautious about not breaking any existing regulations, which I think is a smart move. I just think that there needs to be some way for my grandma or whatever in her IRA to be like, I want to use this yield product, and on her end, she has no idea that she's using DeFi or Badger or whatever, and that cannot happen unless there's stricter regulations and more unity between existing financial systems and this new DeFi space. Certainly, if there's a way for Badger to be involved in that, I'd love to see it. I just think this is what happens when you get more money, right? If we're talking about a 10x in the market cap of Badger, right? So if you're starting to have that amount of funding available to you, okay, now you have the ability to hire smarter lawyers and regulatory people and lobbying type people and that sort of thing.
Have you been following this LexPunk DAO project that's been launched? There's a proposal on Yearn to fund it, and I think maybe like Lido and some of the other bigger protocols have funded this legal advocacy group. And I don't. It's kind of like it's still forming. So they're doing some stuff around the Wyoming DAO law, and they're doing some stuff around providing legal resources and template documents and stuff for DAOs to kind of clean themselves up. And they had a thread on how to, like, I'm not totally clear on this. I'd like to have Gabriel on, who's one of the founders of it. But, like this, are you sufficiently decentralized seems to be a big question that the regulators are asking. So it's like making this direct connection between the governance process of a DAO and how regulators will look at it. If it's decentralized, like what they don't want is for these, like, a couple of VCs and a founder to have like a fig leaf of decentralization over what is like a very centralized project. Like they want it to be, they're looking at some measure of like true decentralization and community control. And so that goes right to the governance process and how it works. So have you thought anything about that? Like the direct connection between governance and your role in it versus this regulatory question?
Yeah, certainly. And I don't think this ever made it on our podcast, but like talking to Boomer about this, that it could end up just being something as simple as Badger makes like a button that some regulatory whatever group can press that gives them an audit of the system, right? And like any DeFi person will be like, well, they could just do that themselves, and it's just like, okay, yeah, but like if that's all they're asking for, just like give it to them. Come on. It, I'm yeah. Sorry. I'm just like trying to think. Like, okay, tell me again. Was there another part of your question that I didn't answer?
The connection between governance and the amount of decentralization in a protocol's governance and the sort of regulatory permission it gives them, right? Like,
Yeah. I think that goes to my point that I was making about the auditing thing. It was just like, yeah, like how do you prove, certainly we all want to be protected from the DeFi project that's really the two guys that are making all the decisions, trying to make it look like it's a decentralized, like, so Wyoming's making that like first step towards trying to like, can we actually write down on a piece of paper like what makes a DAO a DAO? I was saying this the other day in like the Badger chat. I think over on Discord, I think over the next 10 years, we get to see which protocols are actually decentralized, right? And like you get to see what decentralized governance it actually looks like. I think a year and a half into popular DAOs being popular DAOs, some of them are like less than a year old. That nobody knows what decentralized governance looks like, right? Like everybody's just taking a stab at it. Everybody has their own different setups. Everybody gave out tokens in a different way. Different levels of VC backing, different levels of visibility. At one point I put up on my name like $1,500 Badger LLC, right? Because I was just arguing in the chat with a couple of people about like, how is Badger DAO a DAO, right? Like what can you like point to me that really makes it different than a limited liability company? I want to see it happen. I think Badger is one of the closest DAOs out there that I've seen as far as like the governance is run. Sushi is another favorite of mine. Um, so yeah, I mean, I think it's an open question. I think that um, how you set up the governance is the like that is that's the key point, right? I mean, there's nothing else really that makes a DAO different, in my opinion, than like the way governance is structured. And just giving out a token and letting your token holders vote doesn't make you too different than an equity offering, right?
yes. Well, yeah, there's a lot to unpack here. Maybe we can do another episode about this. I'm really interested in this, and I'd like to get someone who is a lawyer or, you know, looking at this kind of stuff. Like I think Gabriel would be a good person, or there's a ton of lawyers hanging out in this Lex Punk Telegram group, so I'm kind of stalking that right now.
Yeah. We really need more lawyers in DeFi at this point, right? That's a big hole I see.
So we've been going for a while, so let's kind of bring this in for a landing. I think I was going to ask you, is it too late to buy Solana? It seems like you're thinking the answer is probably yes. That's probably playing out now. So I'll just substitute. Like, what's your highest conviction crypto trade right now?
Yeah, I mean, it's hard not to just say Bitcoin here. I know that's like really boring. It just and when I hear highest conviction, like in my mind, I'm like, if you were to if you were to punch me in the head right now and I were to pass out for the next 5 years, which trade would I be like the happiest to have on right now? And like that's Bitcoin. Um, I'm yeah, I really like sushi. I think sushi is going to be a big a big DeFi player for a long time. A high conviction on Badger. I think Badger is like the most boring trade you can put on though. It's like go use the product, put your Bitcoin on, earn some yield, buy some Badger. It's really not like a very but that good trades are boring, right? A lot of the time.
Yeah, I think who is it? Peter Thiel had a quote about the obvious trade. Yeah, everyone wants to be contrarian and figure out some smart, really under the radar thing. But if you had just bought like Google and Amazon, you'd be sitting pretty. And I think the same is true for like Bitcoin, sushi, Badger, things of that nature, the things that we already know about. So Hal 1500 Badger LLC. This has been awesome. I really appreciate the conversation and hope it's the first of many. Thanks for coming on.
Yeah, it was awesome. Yeah, thanks for having me.
Cool. Take care.
Thanks, you too.